Good morning, traders, and welcome to March 2015. It's the 2nd of March 2015, Monday, 8:01 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. So important news overnight. The key element, of course, is the China PBOC, the People's Bank of China, cuts a key one-year interest rates by 25 basis points unannounced. The rate's effective March 1st. This is the second rate cut in 3 months. This is a continuation of the currency wars, essentially, that I've been talking about for some time. I'm sure others have too. The interesting thing is that the market's reaction was very subdued to this rate cut. There really wasn't much. There wasn't much of a reaction overnight on this. It came out on Saturday, so the market was not open, but we did get a pop-up on the open in yesterday's session at 5 o'clock Central. We got a quick pop-up to 2107.75, and the market just basically brushed that off. China's February PMI manufacturing registers its second straight month of contraction, 49.9 versus 49.7 estimated. Eurozone February flash CPI decline eases but remains in negative territory, so we're seeing somewhat of a stabilization in Europe with the QE. That's about to start. Eurozone January unemployment at lowest level since April 2012. Further good news from the Eurozone, and the ECB could begin QE purchases on March 9th. Also want to remind you that the ECB meets on Thursday, March 5th. So there's a lot to watch out for there. And then since then, we've had January personal income at 0.3 versus 0.4, slightly worse. PCE deflator negative 0.5 in line. PCE core at 0.1% in line. Looking ahead at 8:45 Central, 9:45 Eastern, we have February final market manufacturing PMI, expecting 54.2. At 9 o'clock, that's a half hour after the cash open. January construction spending month on month, expecting 0.4%. And then also at 9 o'clock, we have February ISM manufacturing, expecting 53.2. ISM prices paid 36. At 9 also, we have former Fed officials Bernanke and Plosser speaking in Washington. At 10:30, we have the weekly $52 billion 3- and 6-month bills. And then this evening at 9:30 p.m. Chicago time, we have the Reserve Bank of Australia's interest rate decision, expected to cut cash rate target by 25 basis points to 2%. Since it's Monday, we'll look ahead at the week. Tomorrow we have very little of significance on the calendar. U.S. Red Book, IBD tip economic optimism, and Fed's Mester. On Wednesday, we have Eurozone Services PMI, ADP employment, U.S. Services PMI, ISM non-manufacturing, the Bank of Canada rate decision, and oil inventories. And then on Wednesday, we have 3 Fed speakers. We have Fed's Evans, Fed's George, and Fed's Fisher speaking throughout the day. On Thursday, we have the Bank of England's rate decision, an asset purchase target. Then we have the ECB at 6:45 Central announcing their refi rate and deposit facility rate. But then at 7:30, of course, we get Bernanke's press conference on monetary policy. That's going to be a driver for the week, probably. And then Thursday, also at 7:30, we have non-farm productivity, unit labor costs, initial jobless claims, continuing claims. At 9 Central, we have factory orders. And then As far as speakers, again, 7:30 we have Draghi, and then at 9 Central we have Feds Williams, who's a voting dove on the economic outlook. Friday. Friday's a big day. It brings in the U.S. non-farm payrolls number and unemployment. And then from there, Friday doesn't have much on the calendar at all. Before that, in the overnight session, in the U.S. overnight session, at 1 Central, we have German industrial production, and at 4 Central, we have Eurozone GDP. So what does that mean for you? The calendar's pretty busy. We're expecting a little bit of volatility or action based on the fact that we are in the first week of the month. We have unemployment at the end of the week, and that's something that definitely deserves our attention. Let's look at what we've done last week and what we expected to have done. Here we go. You should be looking at my chart. For those of you who ask, this software is Investor RT. I'm on the 12.2 beta, and it's my go-to software for technical analysis. It's fed on IQ Feed, also my go-to data feed. I trust it more than anything else. I'm looking at what we've done here, and if you look, we've broken out of that 2088.75 balance zone that we've been stuck in since October 31st. We broke out on the 13th. We immediately started to, the market immediately started to trade around itself. So we immediately started to create a balance profile. And then it continued to trade around itself here. It opened in range, went down to 82.25, and then broke higher for new highs, 2108.75. So all of that is part of a balance. Last Monday, it did the same thing. It opened in range, in value, and continued to trade in balance. And then on Tuesday, we finally break higher to new all-time highs and hold steady near the high. So I started to create a new, so this composite here, this micro composite here ended on the 23rd, and on Tuesday the 24th, I started a new micro, and we'll keep this new micro until the market starts to roll over and down into the prior. So as soon as the market starts to roll into this large high volume node from the 13th through the 23rd, then what I'll do is integrate this balance zone with the red balance zone. But as of right now, they're separate, and they're being separated by the 2099.75. Technically, this is all about what you want to see when you look at these composites. Technically, you could include what happened on the 23rd, but I'm going to keep it so that I can see the clear separation between the two. The key target below us remains 2099.75. This is a low volume node here that separates the balance from the 13th through the 23rd. It's the cutoff point before we start climbing. Once we get through 99.75, the expected action, or the expected activity, is for it to get down to 96 for a test, but 91 becomes the point of control and the key target in the area. And then of course value low, and at that point we will extend this profile out and see where we are, where the market's accepting prices. So far so good. 2117.75 or 2117.25 was a measured move high, and it's been holding. It came in on Wednesday, and I said that or on Thursday morning, and I said that the expectation is for the market to seek lower prices and target 99.75. Since then, on Thursday, we tested 2103.75, but we held in balance. We did manage to push to 2101.50, and then I came in on Friday and said the same thing. It's a 50-50 chance, but I still expect this market to rotate, to roll over, and to explore lower prices as it tries to seek buyers. I think we found our sellers up here temporarily, but the market seemed toppy and was giving signs that it was topping out, and that's why the expectation was for Thursday to be a rollover day and for it to continue to seek 99.75. It has not done so. It is steadfast in its ability to hold on to these higher prices. We're seeing buyers absorbing and stepping in as soon as the market drops. But the key target again is 20.9975. I see more of the same today. So as we look at the overnight session is well inside of the day session on Friday. The low on Friday was 2175, and we just one ticked that 2175 for a rotation up to, and we're trading 2102 quarter, and it rotated as high up as 2102 half so far. So the overnight session really is not giving us very much information. It tried twice. Here's a small pop-up on the open on the China news, and then a quick pop-up on the European open. The DAX was trading all-time highs overnight, and so is the FTSE, but it has slowly given up that strength and has drifted downwards towards 2150. So this morning, I'm looking for a responsive test up towards 2104. So this morning, as we come in, I'm looking for responsive buying towards 2104 or so, and potentially push through to 2105, but I'm expecting sellers to step in, roll this over, and take the overnight low. Remember, the overnight stat is 97, 98% of the days on the S&P, we take out the overnight high or low. Past performance not indicative of future results, but so my guess is that I'm going to be gunning for this 2150 to give way for a test of 20.9975 as the initial target. Now this is a composite LVN, micro composite LVN, and so on. So we're looking for a fight here to take place at 29.975. I would stay in this trade as long as it stays below that 2104 area. But you know, with everything, like everything else, when the market's in a rally mode, and it is in rally mode, as you can see here, we broke out of this long time flag, this balance zone, and have pushed through. When the market's in rally zone, it's best, unless you're an investor or swing trader, it's best to just keep your targets light and tight and look for more opportunities throughout the day. So that's what I'm looking for initial plan, a responsive buyer up to 2104, potentially 2105. Sellers step in to push it down through to 20.9975. I expect it to battle here at 20.9975, and then next 20.96, and then 20.91 is the key target below, which is the composite point of control. If we look at the weeklies, you can see these weekly bars are quite wide in range, and then we have this compression last week. This is typical behavior. Generally, when we're in rally mode, you have a compression in range, so volatility drops, and then a compression in volume as well. So last week we traded 5.2 million, the prior week 4.96. Volume picked up a little bit, but overall, this is speaking of a market that's kind of disinterested at higher prices temporarily. I do strongly believe that we're likely to rotate back down. Again, 2091 is a target. And then below there, you have this 2092 from 2093 or so from way back from that balance zone. So we start to bring in, if we look at it, let me turn down my news feed. We start to go back and look at the overall, as we drop through, we start to look back and pull this balance in. If we drop below 2082, and then we're starting to look at 2068, 2060, 50, and so on and so forth if it continues lower, but that's a long ways away. I want to remind you again, I'm on daytradingradio.com at 10 a.m. Central, 11 Eastern. As far as, and I'll be on DTR to go over the weekly stuff as usual. As far as the Euro stocks, they've continued to push up, but again, I'm expecting this to balance, to turn rotational and balance. It has kind of pushed through pretty farther than I expected. It's closed the entire LVN zone. I'm expecting it to roll over and fight this 35.40 area. 35.53, 35.40 area, and balance there for a while, but it's definitely had a lot of strength. Just watch out if you're trading the Euro stocks for Thursday. It'll be definitely volatile due to the ECB announcement. I really don't have much more to offer. It's 8:17. I'm past my time. Hopefully this was useful to you. Again, I'll be on DTR at 10 Central, 11 Eastern to go over the weekly numbers. Take care.